Hello, welcome everyone to the weekly live room starting at 8 a.m. UK time or GMT time to be precise. Thank you for joining us on the 2nd of December 2013. That means that we're going into the last month of trading of this year 2013. So that's always interesting, of course, another year of trading behind us and interesting to see what we can expect in the last month and also maybe the new year, in fact. Before we do that, though, we're going to take a look at this risk disclaimer, of course, as always, explaining that trading global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. So thank you for your attention on that. Just in case you are new or are here for the first time, we do have a link, blog.binary.com/weekly trading room. Just in case you can't make the live trading room, you can register there with your name and email, and you'll get an email when the recording is ready, and you can view that anytime. So with that said, let's take a look at the euro dollar, pound dollar, dollar yen, AUD USD, and XAU USD. Great. Oh, that's a bit too soon. So, what can we expect in the market today? We're going to take a look, first of all, at the calendar to see what we can expect regarding the news. We have the cash rate on the AUD USD today, so that could be, and in a rate statement. So that is, of course, of importance. Be very careful with the AUD today. That could definitely set the tone. Maybe for more weakness, we'll see. Looking at the technicals, the AUD is definitely bearish, but let's see if the fundamentals agree with that. We also have a rate statement on the CAD on Wednesday. That too, very important for that particular currency, of course. And then the ADP on the dollar on Wednesday. So we do have a lot of news announcements, a lot of rate announcements as well, because the euro and pound have their own rate announcements on Thursday. So that's really a high, a week with a lot of news events, let me say it this way. And on Friday, we have the NFP, which is the biggest of them all, in fact, plus the unemployment rate on the USD. So a week not to take lightly, let me say it this way. Let's take a look at the currencies. First of all, we're going to start with the euro dollar and take a look at the monthly charts as well, because all of these charts, in fact, they have a monthly candle closed on Friday. So all of these candles are November monthly candles that have closed. The November one is this one, of course, right in here, and we see on the euro dollar particularly a pretty big wick at the bottom. After November had a pretty big wick at the top. So there was some upside pressure as we know, although the movement was slow and corrective to the upside. So from a bigger perspective, let's take a look. The currency is definitely corrective. You can see a lot of sideways movement and not much direction. If anything, there is a potential for the euro dollar to be at a resistance spot right here, and this could be a resistance spot to fall back to challenge this bottom, for example. So that's something to be aware of, that could happen. And if we put those trend lines on our chart, we can see that a potential resistance to fall back to 127.50 and maybe lower is possible. However, if the price were to break above the green line, we can see the currency challenge 143 and maybe 145. So that's important to keep an eye on. Let's go to the weekly chart, and we can see that slow movement. It has already been 3 weeks upside, but the weekly candles are getting smaller and less bullish. So indicating that this upside could still be a correction. You can see these downside candles had a lot more thrust to them, indicated also by the fact that the monthly had potential trend line here. So that fits also within that scenario. One way to keep an eye on that is, for example, a trend line like this, and to see if price could break below that trend line, to see if it could fall to the 127.50. Another way of measuring that and monitoring that development is to put a fib from the top to the most recent bottom, and any of those fibs will probably be a resistance. You can see price stopped at the 382, price stopped at the 50, price recently stopped at the 61.8. If price were not to turn around at the 61.8 at 136.30, then the next resistance level is the 78.6 at 137.20, and then the 88.6 at 137.70, and then the top at 138.30. Once that level breaks, then we have a bullish breakout, and we could expect price to move up to 140 and 143. If price were to respect indeed these Fibonacci levels, not only respect but use them as a turnaround, as I said, the targets line up here at these levels. Okay, so 130, 150, 129.75, and then 130, 127.70. Good. Let's move on to the daily chart, and we can see the upside very slow. Recently, price has come very close, in fact, to the 61.8. Let me adjust the fib a bit. You can see very close here. So will price push through it? We might see some continuation to the 78.6, or will we use it now as resistance to fall? That will remain to be seen. Let's take a look at the 4-hour chart. Is there any other way we can see which of the two is most likely? Just keeping an eye on this top already would be a good idea. We could maybe see a trend channel here, for example. Let me see if I can adjust it a bit like this. Or even maybe excluding this price action and placing the trend channel like that is another way of doing that. So that's something to keep an eye on. Maybe something like a channel like this. We are at a bounce or break spot in that regard. So I think that wraps up the euro dollar from my side. You can see here in the 1-hour chart the very slow move to the upside, but it is moving to the upside. So we'll have to see if this trend continues or we do get the reversal back down. Pound dollar. Pound dollar is a bit different because this is in fact breaking weekly resistance to the upside. In a way a bit surprising, in a way also very interesting, because if you look at if you look at it from this perspective, we had a very bullish monthly candle of November, and price broke above this resistance here. Let me make that red. So there's no doubt it's a resistance. So, definitely a bullish break here above very, very important and high level resistance zone and price zones. So that is quite fascinating, because I thought personally with these magnitude of resistances that after October we would see at least a bit more downside before maybe a continuation or a reversal. So a lot of power in the pound, and we can see that pound strength also against other currencies like the pound CAD, like the pound odd, pound New Zealand, euro pound. Pound is pretty strong across the board, in fact. So now that we're pushing above these resistances, what can we expect? The bearish scenario is not necessarily yet totally gone. The bearish scenario was the fact that we could expect maybe a break of this triangle to the downside. That is not yet totally invalidated, although the chances of such a thing developing are now decreasing. One major level to keep an eye on is 167.40. If we break above that, it's a total bullish breakout. Anything below that could still be a bearish triangle. Yet, as I said, the break here of this to the upside is decreasing that chances. The likelihood of price going up to challenge that 167.40 is now pretty high. Down to the weekly, you can see 1, 2, 3, third week of bullish price action, and this week already, although the market has only been open for a few hours, has already seen an upside continuation. So lots of strength here, and this is starting to look like an upside bull flag continuation. So if that's it, we can put if that is indeed a bull flag, we can put a fib. We see a 23.6 Fibonacci retracement, which is a very shallow fib, and the target of that 23.6% Fibonacci retracement is the minus 0.272 at 166.50. So we can see continuation to the upside here, probably this week. Now let's zoom into the daily. Any hook back That would not probably happen today necessarily, but any hook back later this week to the 163, 162.60, those broken resistance levels have a high chance of becoming support, especially with a good break like this. Okay, not always, of course. If you have a small break, then that wouldn't be valid. But if you have a big break like this with a lot of momentum and you hook back to that broken resistance, should become support up to that 167, 166.50 area. So that's something to keep an eye on this daily chart. Let's take a look at the 4-hour chart. You can see the 4-hour chart is in a very strong uptrend, and there could be actually some upside before we get a potential retracement back to that level. The moving averages are very, very steep. I know that not everyone is a big fan of moving averages, but it does show what kind of power there is from the pound to the upside. So that is definitely something to keep an eye on. 1-hour chart, we can see price is just pushing and pushing. And yeah, I have to see if there's a bull flag, something like that. I would gladly take a break of that bull flag to the upside. It's a bit too early in the week for me to trade it right now, right here. I would like to see a bit of a chart pattern, especially Mondays could be very tricky to trade. So I want to see a chart pattern before taking it to the upside. If we do get a bull flag indicated by the green and a break, then I wouldn't be surprised still to see eventually maybe a hook back. And then again, I said, any longs from those red levels could be interesting as well. So something like this, a blue arrow and then red correction and then green arrow, I would expect to be the most likely for the moment. But I'm always cautious on Mondays, and I want to definitely see the green bull flag before trading it. All right, so that's the pound USD. Let's take a look at the AUD USD. Now the AUD USD on the monthly chart, which is not so visible here. 1 second, let me localize these tools for the moment. So that we can see the monthly chart. Good. Now obviously we had a very nice momentum drop here. This seems to be a hook back, and we had a wick plus bearish monthly in November. So very strong continuation, most likely, of the AUD USD to the downside. And what could be the target? Well, if we put a Fibonacci key, we can see price stopped at the 50 fib at 97.20. The target is the minus 0.272 at 83.90. All right, so that is the target. We have one major support level, the green line at 88.50, of course, which still could give cause for the currency to find some support. Let's go to the weekly. A lot of momentum to the downside. So I wouldn't be surprised that if any upside would be actually a good excuse for more downside. Let's take a look at the daily. You can see there's a top here at 94.40. I don't think that top, considering the fact that we're making lower lows and lower highs, I don't see that particular top at 94, let me check, 94.50 being broken. So any upside should see resistance before that level and continuation to the downside. And if we then zoom to the 4-hour chart, we can see that the AUD USD also has a nice, neat downtrend channel, in fact, indicated by the blue lines. And any upside would most likely bump into or find resistance at, first of all, the bottom, second of all, the moving average and the 61.8, and the top of the trend channel at around 93. So 92.50 and 93 looking like a very big resistance zone where I'm expecting and trying to hunt for more downside. All right, the dollar yen. Dollar yen is in fact breaking resistances to the upside. This could be a very interesting development because last year price started to trend in November and had massive trend continuations in December of 2012 and January of 2013, and price in its entirety went from 76 to 103.70, so massive increase. We've had a few months of pause after that tremendous uptrend 5 to be precise. But last month, November, big bullish candle breaking through this triangle. We have the green lines. You can see a triangle. So that looks like a very bullish potential for the dollar yen to continue. Now, one major level, of course, still stands in the way, which is 103.70, which is also the high of this year and the top indicated by the red line. I'm looking for dollar yen continuation of this trend. This is definitely looking very bullish. But what I do want to see is this month, December 2013, I would like to see price break through the 103.70. I do want to see a break of that high this month. If we do break through the high this month, we'll probably see something like this continue, not only then, but now as well. And potential targets, well, we can put a fib on this up move, and we see what the price stop at the 38.2% Fibonacci retracement at 93.40, and we can see a continuation up to the minus 272 at 110, or even 120, maybe even 125. So you can see a potential to move up quite a lot here on the dollar yen. Good. So that's what we can expect in the long term if we break above 103.70. Now that, of course, isn't a guarantee, but looking at the current setup, I would expect it for this month to break above it. And if we don't break above that level this month, then I'd still be cautious, depending on how this month's candle looks like, would analyze if we could have the potential to move back to the 50 fib at 90. For the moment, I'm not expecting that though. I'm expecting continuation to the upside. This is the weekly chart that you can see price pushing above the triangle. So I want to go actually down to the 4-hour chart. And you can see I want to wait. You can see this break to the upside of the triangle, the green lines, and the blue lines indicating the uptrend channel. Personally, I would like price to go back to 101, 101.50, the bottom of this uptrend channel, back to the support to take it long. So I would love to see price do that. I'm not sure if price will necessarily get that low and deep. So I'm going to have to wait today and see how price responds on the first day of the week. But that would be the optimal scenario. Now, not always will price do that. Sometimes we just continue and break because the moving averages, everything is very impulsive. You can see the price here very bullish, and the moving average is very bullish. I lost my drawing tool somehow, but maybe if I move the chart. All right. Well, in any case, not able to draw at the moment. Sorry about that. But the moving averages are very steep, as you can see. So not sure if price will necessarily get back to that level. But if it does, it would be an interesting spot for me to hunt for a potential long. And the target for the moment would be the top at 103.50, 103.70. All right, that's the dollar yen. Let's move over to the XAU USD daily chart. And we can see, of course, gold falling pretty fast, pretty bearish at the moment. Then again, we are also still close to support levels. Will the support be strong enough to kick this back up to the 1520 resistance, or is gold going to fall? That is a difficult question to answer, and I don't like the gold situation at the moment just because of that. We are close to support, and but we are in a downtrend. So either a break of 1226, we can maybe see a challenge again of 1180, and if 1180 breaks, we can see the continuation of the downtrend, or we would need to basically break above 1360 for a real bullish continuation up to 1430 and then 1520. Any move up below 1360 could easily be retracement for more downside. Well, that wraps things up from the Forex and XAU USD perspective. I thank you all for your attention and being here, and looking forward to see you next Monday, 9th of December, back for our next session. We're going to review how December has started and take a look at what we can expect in January 2014. Here's the link, blog.binary.com/weekly trading room, if you want to register for the heads up. Thanks for being here, and wish you all great trading. Cheers.